What you're watching right here, this is no normal video. We'll call this Flippin' Flapjackin' Special Edition, very special edition. I am about to show you exactly my returns against S&P 500, against the Dow, calculated by Fidelity Investments over the last several years. I'm about to show you every single stock I've bought or sold down to the penny in the public account over the last several years. And there's going to be definitely some embarrassing L's I've taken and some unbelievable gainers. I'm going to show you everything into detail. And I'm also going to show you every position I have in the public account right now, how much I'm up on the positions, how much I'm down on the positions, what I'm going to do in the market moving forward, obviously after getting wrecked over the past year, and all those sorts of things. Okay, I hope you appreciate today's video, and I think this is probably the most transparent video maybe in the history of YouTube finance. I don't know, we'll see. Okay, the reason I'm doing this video, let me be very clear, two core reasons. One is, if you are somebody that started following me in the last 12 to 18 months, you can have an impression of me that I'm a bad investor. Why? Because I've gotten wrecked the past year. Wrecked. Okay? So I'm very understanding of that. And I want to show you that despite me getting obliterated the past year, despite even one of my companies inside the public account going to zero, despite countless of my other stocks going down massively, I've still destroyed the market. And the other reason is to show that my strategy does work. I know a lot of times in the short term, it doesn't seem like it makes any sense. And people are like, what is going on here? Like, what are you doing, Jeremy? You're getting wrecked. And I can tell you, over a 3 and 5 year span, this strategy does work. And I do kill the market, okay? And the reason I started the public account several years ago, I started this kind of toward the back half of the end of 2018, got that account really up and rolling. The reason I started that account is, one, is so everybody in the private stock group could see an actual real money portfolio, not like a fake money portfolio, a real money portfolio, and how I build that up over time, the moves I make, those sorts of things. And then from kind of my personal side, the other reason I did that is because there was a lot of debate about me in 2018. And, that was coming off of a failed investment of mine, which was called GoPro. And I sold out of that, gosh, it was either either the end of 2017 or beginning of 2018. So there was a lot of debate about me, and that just kind of boiled up over 2018. I got real frustrated. And I was like, fine, then I'm just going to start a public account inside the private group, and basically I'll show every single move I ever make in that account. And that's how that started, essentially. So yeah, let's get into this, guys. I hope you enjoy it. It's a good one here today, okay, baby? It's a good one. This is no normal video here today, okay? You're going to see a whole lot of stuff, okay? So here's the returns. First off, we're looking at annualized returns. Once again, this is calculated by Fidelity Investments, not me throwing it in a spreadsheet, not some guy chewing grizzly long cut, trying to run numbers and doing whatever he does, okay? This is Fidelity Investments numbers, okay? So over the past month, I've way underperformed the market. Over the past 3 months, I've way underperformed the market. These are the numbers, okay? Year to date, way underperformed the market. The past year, so I'm very understanding if somebody started following me in the past 12 to 18 months, why they would think I'm not good at what I do, essentially, which is stock picking. I understand it. I get it. The numbers are there. It's not like it's close. I've gotten wrecked. It's embarrassing. It's embarrassing numbers. Disaster. But even despite that embarrassment of the past year, I'm still wrecking the market. It's just facts. 18.6% return over the past 3 years versus 10% S&P 500 on an annualized return, and versus the Dow, which is at 9.5%. So think about that for a moment. All that carnage, and I'm still killing the market. Cumulative return over the last 3 years in the public count, 66.93% versus S&P 500's at 33%, Dow Jones at 31%. So yeah, there's that going on, right? And I know what I already know, and I'll get into, I'm going to show you all the numbers and every share I bought and sold in that account over the last several years. I already know that my hater crowd is going to be like, Jeremy, if it wasn't for Tesla and if it wasn't for ELF, you wouldn't have got those returns. Fair. But at the end of the day, those were my stocks. And when it comes to my strategy, I'm going to have some massive outliers. And those outliers are going to perform so well that they will carry the account to victory. I'm going to have a few superstars on my team that it doesn't matter how good the other team is, we will win because we're simply better. And when it comes to my investing philosophy, I never risk it all, and you'll see that in the portfolio. I never risk it all in just one stock. I make a very well-diversified portfolio, and some stocks won't work out. Some stocks I will have to sell for losses, and some stocks are going to hit so big that it's going to make up for all the losses, plus make me way outperform the market. So I have a very different approach to the market and a very different strategy, I guess you can say, okay? So let's get in the numbers. So 2019 was the first full year of running the public account. And that year I had $17,700 in short-term gains, $19,200 in long-term gains. Obviously, it was a short-term gain year, kind of heavy there because it was the first full year of having an account up and running, obviously, right? Almost $37,000 in total gains, which, is way more. And I used to make at Walgreens back in the day. That was, it's a little less than when I started at Quick Trip though. So in that particular year, I sold out for a massive loss of United States Steel, a $4,300 loss. That was a failed investment. Let's just call it that. Failed investment. At the end of the day, I don't know what the heck I was doing in a steel play, commoditized industry. And what I learned from that is usually stay away from commoditized industries. That's not my specialty, okay? Whirlpool had a little slight gain there. Tapestry had a very nice gain of $2,600 there. NVIDIA, I bought 16 shares of NVIDIA. I think I bought that at the very end of, I want to say it was either the very end of 2018 or beginning of 2019 because the market was just getting wrecked and NVIDIA was one of those stocks that was just trading insanely cheap. Now you can also run the calculation. That was a big mistake that I sold there. I should have held those shares because today, I can tell you those shares would be worth a whole lot more than what I sold at there, okay? Topgolf, which Callaway company, this is way before they owned the full Topgolf company, essentially, basically kind of broke even on that stock between short and long-term gains. Nordstrom, in that account, I sold for an $1,800 short-term profit. Intuit was a $408 short-term profit. Home was a money loser for me of $1,200. Elf on a Shelf, massive gainer there of $14,500 in short-term gains. By the way, I should have kept every share of Elf. I never should have sold any shares of Elf. That was stupid. Worst part is the majority of shares I held was actually in my main private account. Way more shares. And I dumped those shares in mass as well. It was just a dumb move by me. But anyways, it's still a $14,500 profit in a pretty quick amount of time. Cirrus Logic took a massive gain on that one of $19,400. Alibaba, I took a $1,300 short-term gain and a $489 long-term gain. And then Apple, I took a $2,000 short-term gain on that one. So that was 2019. 2020, we ramp it up a little bit. $53,000 in total gains that year, $17,100 short term. So basically that didn't grow. That was about the same. And then long-term gains obviously started to come into play here with $35,952. So, this is like more than my salary was back when I was working at Quick Trip back in the day. Okay. So, Slack work, which by the way, they ended up getting bought out later on down the road by, I think it was, I want to say Salesforce, if I recall. I can't 100% remember, but I took a $2,600 short-term gain there. Oobity Booba stock, I took a $7,000 short-term gain there. $5,100 short-term gain on Stitch Fix. On JP Morgan, I took a $1,300 short-term loss on that one, unfortunately. Robot, I took a almost $16,000 short-term gain there, $4,200 short-term gain on Foot Locker. Fizzy Get Dizzy, I took an $18,700 short-term gain on that, and then I took a $28,600 long-term gain on Fizzy Get Dizzy. They make the LaCroix product, if you didn't know. They have other drink brands as well, like Faygo and a few others, but they're known for LaCroix. Cirrus Logic, I took another big gain there, $7,300. Basically, they make the little chips that, basically run the audio in your smartphone, essentially, okay? Especially with Apple, they're massive. An embarrassingly massive loss I took in CCL, $43,500, okay? Wow, embarrassed. Okay, so first off, let me just address that. What happened? I started investing in CCL very heavy at the end of 2019 and beginning of 2020. Why was I doing this? It was a valuation play. The valuation, in my opinion, it was far too cheap, and it was a great dividend payer. And I thought I was getting actually in a pretty safe stock. And then a once in a 100-year health event happened. Obviously, it wasn't in my control, but sometimes that's what's going to happen in the market. Certain things are going to transpire that you never saw coming. When I went into that, I never thought, oh, there's going to be a once in a 100-year health event that's going to cause the cruise lines to shut down their businesses. And the craziest part is, what ended up happening was CCL was like almost a face of Rona for a bit there because of the cruise operators. Everybody was talking about people being stranded on ships because of Rona and all this. It was horrible. And, I ended up selling out. I didn't see that situation getting better. That's the bottom line. And by the way, CCL today, like you can calculate, you can run the numbers on what I sold out of CCL at. And, I think CCL is, I want to say CCL today, even years later, is lower as far as its stock price, and probably considerably lower than it was when I sold out of it back in 2020. So, I just saw no way out of that. I just saw them continue to raise money into oblivion and just being in an ugly situation, okay? Cheesecake Factory, I took a $6,400 gain there. And the one thing that they don't show is obviously dividends received, which some of these stocks pay dividends, some of them don't. And then Beyond Meat, I took an $1,800 gain there on Beyond Meat, and for a grand total of $53,000 in 2020. Alrighty, let's get into 2021. So 2021, actually less moves, more profit. Big amp up here in long-term gains, which should be consistent with the long-term with the public count over time. The long-term gains should just keep rolling bigger and bigger as the count builds out over the coming years. So $34,600 in short-term gains, $83,920 in long-term gains. Total gains that year $118,548. First off, I'm very thankful, extremely thankful for those sorts of numbers. Because at the end of the day, I always remember just the dream was to make six figures a year. I always thought it'd be so cool if I could make six figures a year from a job and then six figures a year from, basically investments. And to get that in the public count alone, in 2021 was definitely a good feeling. I would say that it's a good feeling. Okay. Now, Wynn Resorts, I took a $16,700 short-term gain on Wynn Resorts in 2021 in the public account, and I took a $14,000 long-term gain on Wynn Resorts in the public account. I took a $708 short-term loss on Walgreens Boots Alliance that year. Upwork, I took a $22,000 gain on a long-term basis on Upwork. On Switch, I took an $885 short-term gain. Revolve, I took a $25,000 long-term gain. Dropbox, I took an $18,953 gain, and then another almost $14,000 gain on a long-term basis. Cruisy Doozy, I think I took the rest of my profits, I want to say, on Cruisy Doozy in 2021. I had little shares left there, $8,700. And Beyond Meat, I took a $1,200 loss on Beyond Meat, which was a tough pill to swallow, unfortunately, there. But that was ultimately the right decision to make, obviously. So, grand total, good year, 2021. Now, 2022, obviously, I've been wrecked this year, right? So you would assume that whatever I've taken for gains this year has to be far lower. Well, what if I told you 2022 is actually a record-breaking year for the public account in terms of gains taken? Let's go ahead and take a peek, okay? So this year, I've taken a $55.79 loss in the public account, and I've taken $253,805.78 in long-term gains, for a total gain of $253,749. Now, I will have a Voyager write-off in this account that I'll take after Thanksgiving when my, basically those kind of shift over to long-term gains, long-term losses. So that's going to pull that number down a little bit, but still it's going to be a record number. It'll end up being like a $240,000 year or so in this account, which is over a double up of what it was the previous year. Now the proceeds from that, good old Tesla Tesla. Yeah, when you put $12,800 into a stock and then you get $262,000 out of that stock a few years later, it's it does you pretty well, right? I took $138 short-term gain on PayPal stock, and then I took a $193 short-term loss on Dropbox and a $4,190 gain on Dropbox on a long-term basis. So obviously, when it comes to 2022, there hasn't been much activity because it's not like I'm going to sell many stocks for, any sort of, let's call it like big gains this year, right? And usually I'm going to sell my stocks when they're up and when I feel like they're either fairly valued or overvalued. Here's the thing. I feel like there's basically, other than the Tesla sale early this year, right? I feel like every stock I pretty much hold, and I'm about to show you the entire account. We'll go through every single position and up and down and what I'm doing with those stocks and what my plans are. Am I going to sell them, buy them, things like that. But basically every single stock I feel is extremely undervalued. So that's why there's hardly any trading activity in the account this year, because at the end of the day, what am I going to do? Am I going to sell these stocks down massively? Like it just, to me, it doesn't make sense. If I feel like there's, the stocks are extremely undervalued, which is where I'm at for basically every stock in that account. So it just hasn't been a year of big moves for me, but at the end of the day, it's still a record breaker. The numbers are what the numbers are. So 2019, the first full year of running the account, great gains to start off. What was it, $37,000 or so? Then we went up to 50,000 plus. Then it was 100,000 plus. This year's around $250,000. It'll be a little less after the Voyager write-off, but still record breaker after record breaker for the public count. Okay, now let's go ahead and start diving into the public count. Okay, so first off here, let's talk about the green, and then we'll start it with the good, and then we'll go to the bad, and then we'll go to the horrible. Okay, and everybody that likes to see those big losses, you'll get to see some big losses here. Okay, let's put it that way. So first off here, good old Tesla Mile. So that one's just a hold for me with those 1,500 shares in there. I mean, it's possible I could start buying Tesla again in 2023. I'm not going to put it out of the equation. In past years, it was absolutely out of the equation. 2020, 2021, I couldn't even think about buying Tesla shares. If this baby keeps tanking in 2023, let's say they aren't hitting numbers. Let's say there's the recession's real, let's call it, at that point in time. And, the company's just going through some really, really tough times and some really tough numbers. There could be definitely a moment where I buy more shares of the stock, especially if it was to go under $120 a share. Elf on a Shelf, 610% gain on this one. That one's just a hold as well. I can't, as much as it's tempting for me to sell that and put the money somewhere else, Elf's executed so well over the last several years. I saw that being a turnaround play, and they've done everything just as good, if not better, than I ever thought they would. I can't sell Elf. It's impossible. And plus, I've regretted every share I've ever sold of Elf, so I can't sell the last 1,000 shares there. Revolve stock, 150% gainer. If anything, I'm probably more interested in buying more Revolve in 2023 than selling. Really good company, really good management team that just has their head on straight, and they've done a phenomenal job running that company. It's a clothing company. They own Revolve, they own Forward as well. And, just a great player in the internet segment in terms of selling clothing. Then no one does it better than them, in my opinion. Skyworks Solutions, semiconductor play, huge in 5G technology, as well as many other technologies. I think everybody thinks about them as a 5G play right now. But as far as this one, 26% gainer, I could see myself I wouldn't be surprised. I'll say this, okay? I wouldn't be surprised if Skyworks Solutions stock in 2023, in terms of my position, I wouldn't be surprised if it goes negative. I wouldn't be surprised. If there's a lot of concerns about iPhone sales, let's say in 2023, and what's going on there, I wouldn't be surprised if at some point in 2023 the semiconductor stocks get hit with another massive sell-off, another massive drag down. Next thing you know, I'm down on Skyworks Solutions. If that happens, I'll be a heavy likely buyer of Skyworks Solutions shares more. Great company. They've paid me out a lot of dividend money over the years. It is a good dividend payer. And, they've done a phenomenal job running that company. Fubo, 11% gain so far. I need to build that position bigger in this particular account. I think that's one of those 10x to 100x type stocks. We'll see. I don't want to get too excited, but I think as long as they make it through the dark days of the next year of, taking massive losses and those sorts of things, the upside for that company is just ridiculous. Palantir, really like this one. I want to continue to build it out. It's a company that's at the cross sections of data and artificial intelligence. And when it comes to Palantir, I just see their business getting exponentially bigger over the next, decade, to be honest. That's a long-term play. There's definitely elements that remind me of Tesla in terms of the community, the understanding of how big the opportunity is long-term. Obviously share-based compensation's destroyed the company for the past, I'd call it 1 to 2 years in terms of how people look at the financial statements and things like that. So that's working against the company. That will be less of an issue. Google McDougal, I need to build this out to be a bigger position. My stance on 2023 and what you're going to likely see me buy a lot of in 2023, you're going to see me buy a lot of likely we'll see how the market shakes out. But I think you're going to see me buy a lot of large cap stocks. A lot of more of Metas, a lot more Googles, a lot more Amazons, a lot of the large caps that have already started to get hit really hard. And if they get hit even harder, if let's say the whole index is pulled down at some point in 2023 in a major way, let's say, SP 500 sells down to, I don't know, something in the twos, I definitely see myself being a heavy buyer of a lot of the large cap companies, maybe even some AMDs, NVIDIAs, things like that. Okay. Now, let's get to the bad, and then we'll get to the ugly. So Meta stock, down about 5% on this one as of right now. I need to build it bigger. I need to keep building that position. I know it's already a pretty big position at over $200,000. I need to build it bigger, just to be quite frank. And so I need to just continue to build that one. I have full belief there. I think Wall Street's got it wrong on that one. Avant Brands, as far as this one goes, I think I own more Avant shares, but sometimes they split the Avant shares and the Planet shares. So I'll show you that in just a moment. But in terms of Avant, I might buy a little shares in 2023, probably not too crazy. Same thing with Planet. Planet, I'm waiting to see what happens in Florida. I really want to see what numbers they start to put up because that's a wild card. The Planet has been pretty good with running their balance sheet. I think as of the last quarter, they had, I want to say, over $50 million of cash on the balance sheet. So that's good, especially for a company as small as a Planet. But I really want to see what happens in Florida for the company. Amazon, down about 15% on this one as of right now. It's another one that I'd say there's a high probability I'll buy more shares in 2023. There's, obviously it's kind of caught in a whirlwind of bad news right now, and it might continue to be for the next year. Okay. Now to the ugly. Okay. Corsair, down 40% on this one. I think they're going to set up for they're one of the small cap companies that I'm actually extremely confident in for their 2023 numbers. I think I'm extremely confident their margins are going to get much better, their revenue, their profitability, cash flow, everything like that. I don't think that company's done a bad job running their business. I know I'm down 40% and that's ugly, right? But I want to be clear. I don't think Corsair's done I don't think their management team is to blame. I think it's just the market. I think at the end of the day, everybody wanted to sell out of that stock. There was no one, really excited about gaming hardware, streaming hardware in 2022 because it was the year the world opened back up. In hindsight, I should have waited on that one. I should have waited to buy until this year, but obviously you could say that for all stocks, right? Because almost every stock's lower this year than it was last year. So that's the same argument that can be made across the board. But yeah, in terms of Corsair, I think they're setting up in a really, really good position. Oatly, down about 41% there. I really want to buy more Oatly, but I kind of put them into the penalty box like the Chef, where their numbers have just been so insanely disappointing that I'm kind of like, am I ready to buy, or do I need to see confirmation that things are getting much better? The thing I'll say about Oatly is the price of oats has tanked. And I mean tanked in a massive way over the past 6 months. We're going to see that in Oatly's numbers in 2023, and I wouldn't be surprised. I'm expecting Oatly's margins to get considerably better, as well as their cash flow and everything they're kind of doing with that business. But in the short term, it's obviously ugly times ugly there. The Planet, I already talked about the Planet and Avant. I already talked about those. The Chef, I don't know what else I can say about the Chef other than I just am embarrassed. That's a difference between the Chef and every other stock I hold. It's the only one I'm embarrassed to be a shareholder of because I feel so let down by the management team. They said they were going to do this. They said they're going to do that. They said they're going to do this. They said they're going to do that. And they basically have missed almost every single everything, to be quite frank. And it's just been disheartening to own that stock. And like I said, it's just been embarrassing. So, Chef's kind of a wait and see. I'm giving them time to turn the ship around. I still have hope there. I got a great question the other day. It said, what in a situation like this with the Chef being down a ridiculous amount, it's embarrassing. What makes me not sell that stock right now versus when I sold CCL or when I sold GoPro back in the day for a loss, right? And the big difference is with the Chef, I still have hope there. In CCL's case, I saw no way out. In GoPro's case, I saw no way out. And GoPro's, I think, lower today than when I sold out years and years ago. And like I said, I think CCL's lower today than I sold out, several years ago. So those are obviously the right decisions in hindsight. With the Chef, I'm not to that point yet. If they keep putting up these horrible numbers, and obviously, it's going to be what it's going to be. But I still have hope there. And I still am deep down, I still do believe that they will fix the margin situation. And I almost feel like stupid for saying that, to be quite frank, because, it's just disappointment after disappointment after disappointment after disappointment. But I really, truly feel they're going to fix the margin situation, the cash flow situation, and they'll have the company survive in 2023 and get to 2024, and then hopefully start making some dang money in the business. And then from there, then it's smooth sailing, because then you're just running a big food company that's profitable. I just hope they don't screw it up and they can make it out to that other side, because if they make it out to the other side, I'm such a huge believer in the brand and the products a company has that I think they'll be able to, become a food giant. I still truly believe that. I'm just afraid the management team might not be able to get them there. And that's what keeps me from, saying load up on shares. And so it's obviously, it's like that, right? And then Voyager, stock's worthless, obviously, and I'll take my $15,600 L in this particular account. My big loss in terms of Voyager was in my main private account, which was I think that was like $250,000 loss or something like that. It was a huge number. So in this account, I didn't go as heavy into Voyager. And I think this is in this account, I know everybody watches it, every move I make in there, right, inside the private group. So I kind of always have to watch myself. So I almost feel like I should maybe put all my money moving forward in the public account, because honestly, I'll probably do a better job running it than if I just control it myself, because I won't be as tempted to, let's call it, play dangerously, because I know everybody's going to be looking at every single move. So that's where that particular account's at right now. In terms of, am I going to add new stocks? I mean, it's a potential I could add a new stock or two in 2023. But as of right now, there's so many stocks that are down so much. And a lot of companies I want to build bigger positions in that I don't have built out. The Palantirs, the Googles, the Amazon stock like that I'll probably just continue to build positions rather than I got to add a new stock. If the market goes on some sort of epic beast run, then maybe it'll be a point in time where I add a new stock or two. So that's where I'm at. Hope you guys enjoyed this video. It was a beast video here showing you the returns calculated by Fidelity, showing you every single profit and loss taken over the last several years in that account, and showing you all the positions and kind of going through those, the good and the bad, which is, I think, always important. It's part of the market, right? So appreciate you joining me. If you're ever looking to join my private stock group, we have our once a year massive sale coming up on the Black Friday sale, to join in there to get access to see all the moves I make in the public account, the buys and sells, to obviously get access to all the course curriculums, to get access to the Discord chat, and everything else in there. So yeah, if you're interested in joining, check out the pinned comment down there, and we'll send you over the deal when it drops on Black Friday. Much love as always, and have a great day.